Imagine waking up to yet another twist in the never-ending saga of trade tensions between the US and China. It's enough to make any trader's head spin. But here's where it gets controversial. Is this just another round of empty promises, or could it finally lead to real progress? Stick around as we dive into the latest developments, because this is the part most people miss, the psychological pull that drives market reactions. Hello there, fellow traders at Investing Live. Whether it's morning, afternoon, or evening for you, I'm thrilled to kick off the new week in the FX markets with some fresh insights. We are still stuck in that frustrating cycle of US-China tariff negotiations that feel more like a broken record than genuine progress. For beginners, think of it as a series of high-stakes discussions where each side threatens tariffs, extra taxes on imports, to pressure the other into concessions, only for deals to fall apart or get delayed repeatedly. It's exhausting, right? After weeks of building anxiety, though, we've got a glimmer of hope. Promising developments suggest a potential US-China agreement. Check out the details here. https://investinglive.com/news/positive-signs-emerge-of-China-deal-20251026. And this is where the Pavlov dog analogy comes in. Ever heard of Ivan Pavlov's experiments with dogs that salivated at the sound of a bell because they associated it with food? In trading terms, it means investors are conditioned to react predictably to news like this. So, the advice from some market watchers? Jump in and buy risk assets, as if on autopilot. But is this wise, or just a trap for the unwary? It sparks debate. Does following the crowd like trained animals really pay off, or could it lead to bigger losses when the hype fades? For context, tariffs can disrupt global supply chains and increase costs for consumers and businesses alike. For example, if the US slaps tariffs on Chinese goods, it might make electronics or toys pricier in America, while China could retaliate by taxing US soybeans or aircraft, hurting farmers and manufacturers on both sides. A real deal could ease these tensions, boosting economic confidence and potentially strengthening currencies tied to growth. As for the early FX action on this Monday, October 27, 2025, the rates haven't shifted much from the close of US trading last Friday. Here's a snapshot of the indicative opening levels to help you plan your trades. Euro to US dollar is hovering around 1.1629. US dollar to Japanese yen stands at 152.78. Pound sterling to US dollar is at 1.3317. US dollar to Swiss franc is at 0.7968. US dollar to Canadian dollar is at 1.4005. Australian dollar to US dollar is at 0.6545. NZD USD is at 0.5780. These figures give us a baseline, but remember, markets can swing quickly based on news. For newcomers, euro to US dollar relates to the euro versus the dollar, often influenced by European economic data, while US dollar to Japanese yen reflects yen strength, which can be swayed by Japanese interest rates or global risk sentiment. What do you think? Should traders treat every tariff rumor like Pavlovian conditioning and rush to buy risk? Or is skepticism the smarter play? And here's a controversial take. Maybe these deals are more theater than substance, designed to manipulate markets for political gain. Share your thoughts in the comments. Do you agree, disagree, or have your own wild theory? Let's get the conversation going.